SBC Media.
Welcome to the iGaming Daily Podcast, analysing the news from the betting and gaming industry all over the globe, supported by Optimove, the #1 CRM marketing solution for the iGaming market.
Depending on who you talk to, the landscape of gaming in the US can look very different. Some swear it's only the regulated market. Others will tell you there's a wide range of additional verticals, ranging from lottery couriers to sweepstakes sportsbooks. Some will tell you crypto is a non-starter in the US. With so many conflicting opinions, it can be tough to tell fact from fiction. So on today's episode of iGaming Daily, we will speak with Approvely founder and CEO Chelsie Cooper and debunk some of the biggest myths in the space. I'm Jessica Welman, managing editor of SBC Media. And before we dive in with Chelsie, just a quick shout out and thank you to our sponsor, Optimove, the #1 CRM marketing solution for the iGaming market. Chelsie, welcome to the podcast. I'm very excited to have you here because the crypto side of this specifically, I know nothing, and I'm really ready to dive in.
Thank you. Thank you so much, Jessica, for having me here. I'm really excited to be chatting with you today and educating the market.
Yeah, so just really quickly, for people who don't know Approvely, can you just kind of explain what it is you guys do?
Sure. Approvely is a payment platform, and we have curated this business specifically for niche markets, which include the online gaming sector. So we infuse payment methods, but also compliance and now stablecoin infrastructure.
Okay. I'm going to do my best with these stablecoin questions. I'm so bad. For a tech-savvy industry, I'm like, I don't really do AI or crypto. So I feel like kind of myth number one is, I feel like covering stuff, I just see crypto and immediately think like, oh, well, that can't apply to the US because that's just a different sector of the business. So, I mean, I guess to start with, why do you think there is that perception that US operators, both in regulated and unregulated verticals, just kind of think they can't even do anything related to crypto beyond just like deposits?
Yeah. I think it's a really good question. And quite honestly, having launched the stablecoin infrastructure, we get it pretty frequently. It's an education piece on what's possible with stablecoins. And so oftentimes operators will have this perception that the use case for stablecoins is to have players use a wallet at checkout and pay with a stablecoin. But in fact, the way that we're looking at stablecoin adoption is through providing infrastructure to the operators. So the way that would look is today, as a standard practice, most of the operators across a large variety of online gaming will take card payments at the checkout and a number of other payment methods. And that's the same way that we're using stablecoin today. So our operators will still pay with a Visa or a MasterCard, and then we will use the stablecoin infrastructure to swap the transaction at point of purchase to USDC and instantly deposit it. So instead of thinking about stablecoin infrastructure as my players need to have stablecoin within their wallet, we're thinking about the utility of stablecoins and how they can speed up the transaction to an operator. So now at time of purchase, our operators today are able to receive player deposits within 3 seconds. So the standard legacy providers today just can't move at that speed. So that's the use case that we're seeing and adopting on our platform.
I know, I've played here and there, and depositing can always be a frustrating piece of the process on the consumer side, in that your card gets declined, your bank sees something related to gambling and bounces it. What's the rate that happens? And on the operator side, what's kind of the negative impact of these kinds of incidents, and how does getting the stablecoin right away alleviate that?
Yeah. So, I mean, that authorization rate, I think we could literally have an entire podcast on that, because aside from all the other things we talk about on a daily basis, but authorization rate remains pretty high. There's many ways to handle that, but it is largely the acquiring bank, the institution you're using, the way that the accounts are set up, the region or the geography that the player is located in with, and having acquiring in those jurisdictions that matches the card. So there's there's a lot of things that go into the authorization rate. And in some cases, authorization rate is just because the players, maybe don't have funds on their card. And, our operators a lot of times are very watching the trends minute by minute as these transactions come in. That's number one important to them because they're paying to acquire customers. It's an expensive game. So authorization rates are number one for us as well from innovation side and ensuring that we can have the best ones in the industry. To your point about the misconceptions as well, I would say depending on the game style, there's also misconceptions around the regulatory requirements for stablecoins. So what are they allowed to do? What's the game style that allows, stablecoin usage? But from our perspective, since we're using it as a utility and being able to move money faster, there are many use cases that have no issue with this payment method.
That's really interesting because, especially in the regulated market, I think there's like one state maybe that is it Colorado, that is somewhat open to kind of crypto deposits. But for even the regulated market, there's opportunities to use stablecoin.
Exactly. Yep.
Very cool. For the banks that kind of sponsor these sites and regulators and the bank regulations of all of this too. There's a whole other piece of it. We're not even talking about gaming regulations for banking regulations. What does using stablecoin as a point of transfer, how does that help kind of reduce some of the risk that you want to avoid as a bank doing not just gaming regulations, but in unregulated verticals, still doing banking regulations?
Yeah, I think that's really key, is thinking about not only gaming regulations, but payments and banking regulations. We see it as one and the same, as the platform should be doing a lot of the compliance work for operators, meaning we should be thinking about this as a holistic approach rather than just, a single piece of the business. So with technology advancement, there's, a lot more oversight that we can give to acquiring banks and financial institutions in the market today with the way that we're thinking about KYC, the way that we're thinking about data, the source of the transaction. A lot of that now, we have more oversight than ever before. And our personal perspective on that is that the banks and partners that we have in the ecosystem, we partner with to help them understand this industry. We educate them on what's, where the risk lies, what are the tools that should be used, because we need those institutions for our industry to continue to thrive in the way that it is. So our perspective is actually to give more oversight to the parties in the industry so we can continue to operate. And, the same with the regulation that provides a framework for being able to follow guidance from, the states.
To kind of put a cap on this conversation before we segue to our next one, it seems like Approvely is just really out front with this stablecoin utility. Why haven't more payment service providers and banks kind of clued in that this is something that can help smooth the process?
Yeah, well, there have been a lot of pretty big movements in the market. You saw Stripe acquire Bridge for $1.2 billion. That's a pretty big market signal that the legacy providers are going to have to get up to speed with this. So I think it's really because those systems were not built with this type of infrastructure. But our personal opinion is that's where it's going. And it'll be requirement. Just like we saw on the player side today, you won't have much success as an operator if you're paying with ACH rails and telling your players they're going to have their payment in 3-day clear time. Operators have to enable RTP. They have to enable direct to debit. And we're seeing the same movement on the operator side. We want our deposits fast. We want liquidity management. We don't want to move big wires across border. So stablecoin is really the only infrastructure that's going to allow us to do that. So I think why the other PSPs probably haven't done it is because they can move at that speed, or potentially, they're going to start acquiring platforms that will do this type of movement for them.
Awesome. All right. Well, I'm going to process all of that because I have learned 30 times more about stable coins and that stuff than I knew before. So we'll take a quick break and then come back to debunk another myth about U.S. gaming.
SBC Leaders connects the gambling industry's top-tier operators and associations to share the best ideas, collaborate on solving the biggest issues, and push innovation throughout the betting and gaming industry. If you're an operator and want to join the discussion, visit sbcleaders.com for more information.
Welcome back to iGaming Daily. I'm Jessica Welman, joined by Chelsie Cooper, CEO of Approvely, and we're debunking our second myth of the episode. And this is a timely one given what happened in California last week related to DFS, which is this idea that sweeps, DFS, all skill games online, all of the kind of unregulated verticals are the wild, wild west with no compliance and no standards whatsoever. So I think the big critics out there, and you hear them very loudly on LinkedIn, will tell you that these protections don't exist on these sites. I guess for the case of payments in particular, do you agree with that? And if you don't, why do you think they're misinformed?
It's a great question. And yeah, I see also the same critics on LinkedIn. I think the part that they're missing is that while they are maybe actors out there, I'm sure that they have data around this, the large majority of US companies are self-regulating. They are looking towards experts in the industry and asking what they should be doing to build a sustainable business. Our perspective is that that's really the way the operators should be thinking, is about sustainability. And so if they actually want to take payments in the US, there really is not a way for them to get through without compliance thresholds in place. So from a banking perspective, they would need to have very similar infrastructure for compliance that any DFS operator would have, and they're opting to self-regulate in most cases. So operators that would want payment acceptance would be held to these standards. And from my perspective, there really isn't a bank or payment processor in this space that will accept any customer that's operating in these markets without that framework in place.
Well, and when you're talking about DFS, what you have to remember, too, is there are plenty of states where DFS is regulated, and I assume none of them are going to have a different payment version for these states that they do not necessarily have to meet some specific level of what it is that they're doing. Moving on, though, like the other piece of this, and we mentioned it a bit in the first segment, how much do people kind of forget banking regulations and banking standards about what it needs? Like you kind of mentioned that no bank is going to work with these people. What do those standards kind of look like for people who suggest that there's not safeties in place, my money isn't safe, that kind of thing?
Yeah, and it's absolutely a part of the conversation, because our perspective is payments acceptance and banking really run one and the same, so that framework exists. And you can't scale without this in place, quite frankly. So yeah, we're looking for our operators to have a full KYC process in place. They're going to have KYB and KYC checks, as well as persistent transaction monitoring. Coupled with that, we're also partnering with some of the best in the space with regard to geo-fencing. So we know and we are able to ensure that operators are not operating within states that they're not supposed to be operating with. So it's a full holistic approach here on the compliance piece of it, and designing the system to get even stronger over time and to get more information down to our bank partners so that they have full oversight of what's going on with our operators.
Thinking about, again, going back to kind of the first piece of this conversation, chargebacks and fraudulent payments and those sorts of things, there's got to be, for these operators, their own internal motivation to set these things in place, that they don't necessarily need somebody from above telling them this stuff is necessary. I assume when you start working with a partner, they come to you saying, we need X, Y, and Z, more than you go to them saying you need X, Y, and Z.
Absolutely. Yeah, I would say that's the large majority, is they're leaning on their payment service providers to give them the overview of what's required and forward thinking about operators we love to work with are ones that are asking about the latest innovation in managing chargebacks and disputes, the ones that understand that if they don't get this right, they literally will not be able to scale their brands. Because if we look even at operators that are very focused on acceptance rates, if they're too focused on acceptance rates, we know that 3 months down the line, they're going to have an issue with profitability. So it's really a holistic approach. They have to be considering all these tools and technology that are there. One of the things that we've been using lately is a AI model that detects fraud. So players, we understand the likelihood of those transactions to be disputed, and we can guarantee the transaction to our operator when we do that instant settlement. So basically, we're removing a lot of these operational inefficiencies around, hey, I take a transaction today, but I have a 120-day timeline for that cardholder then to dispute it. So there's so much advancement with regard to managing fraud, and I think it's only going to get better, especially, with AI, and that we have that at our fingertips now. So I expect it'll be somewhat of a norm for these operators to increase their chargeback and fraud tools internally.
You make some really great points about needing to think holistically about keeping costs down for operators, and I want to go into that in a second. To just put a cap on the sweeps conversation, I don't think anybody that works with unregulated verticals would argue that there aren't people doing it very, very poorly. But how much, as someone who works with so many partners in these spaces, how much do you think the market is represented by these people that really are just, putting stuff up by themselves versus actors that are putting in places and, like you said, trying to build a sustainable business?
Yeah, I think there's probably even a lot of data around this. I know that there are some firms in our space that have been running data on this, but from our side, they and largely the banking and payments acceptance side in the U.S. market would not afford any operators the ability to get through if they were not holding up these standards. So, you might be able to go very short term and get an account with, a PayFac or something like that, selling T-shirts online. But we all know that that's not going to be sustainable. So the operators that we work with are including fraud management officers on their team that are dedicated to this, and they're thinking about compliance very much as a part of the business model.
All right. Well, I don't think it's a myth that being a small operator in the U.S., regulated or unregulated, is an extremely costly endeavor in a very competitive space. When I speak to smaller operators and I talk about, the overhead, payment seems to be the thing that they bring up first as the thing that kind of costs them the most money on transactions. So for smaller operators that do need to be super mindful of this, what do you think the biggest gaps are when it comes to payments and efficiency?
Yeah, it's a great question. So I was actually the host for the SBC Payment Leaders Summit for SBC of America this year. So I had the opportunity to sit on the stage and listen to all of the panelists this year. And it was brought up pretty frequently about the total cost of payments acceptance. And I think that's also the way that we're thinking about payments for the gaming industry, because there's a lot that goes into it. And, someone was quoted on the stage saying payments acceptance for the online gaming industry for very sophisticated operators. So think about, your top 3 biggest operators is somewhere between 7 and 8%. And, for a smaller operator could be up to 14%. So we're thinking about all of the cost bundled into what it takes to run an online gaming company. This would include your fraud and chargeback management systems, third-party acceptance that you're using, tokenization, interchange costs, the entire suite of what it takes to actually run a payment. It's very, very expensive. And I think operators are sometimes very focused on the one piece of the business, which may be just the interchange costs or the markup to the brands. So I think we are constantly educating around what's the total cost, to include even refunds. So as a strategy, some operators are just refunding players when they're not happy. Well, that actually that's a cost as well. So yeah, it's very expensive to run.
Yeah, I mean, and chargebacks in particular, can you talk a bit more about just how to reduce that from happening?
It's a very contested topic in our space right now, simply because there's a lot of rule changes that are happening. So there's a new VAMP program, which is going to basically put pressure on a lot of the acquirers to have their fraud rates far under what they are today. And unfortunately, a lot of the tools that the operators have been relying on, so think about 3D Secure, Ethica, Verify, those tools will no longer really help the operators to keep their fraud rates down. Those are tools that actually help operators after the fact. They're very like reactive tools. So think about, we're refunding players to avoid the chargeback. So the new rule change, we believe, is where operators need to be thinking about how to actually stop the chargeback from happening in the first place. So we're going to be looking at the fraud rates across the industry. And if a chargeback happens at all, it's actually counted towards your fraud rate. And that's a problem. So it's definitely something that's still somewhat of a moving target, because Visa's in a exploratory phase right now where they're getting feedback from the industry to say, hey, like, is this reasonable? Is this going to work? What other tools can we use? So that is something that's still not completely defined at this point, but we do know it's an emphasis for the space. And the way we think about it is trying to use tools on the front end to validate the likelihood of the player from disputing. So that's what we use with an AI system, which will validate the traffic at point of purchase. We have a likelihood of knowing that cardholder will dispute the transaction. And only if we know that they're going to be clear will we fund that transaction to the operator.
So I guess overarching advice to smaller operators sounds like focus less on how to cut costs down the road of incidents and take a step back and think about how proactive choices that may feel like they're more expensive in the moment are going to significantly have impact when it comes to those things that you're trying to reduce.
Yeah, absolutely. And, operational efficiencies as well. So we're thinking about like, what is the cost to run the business? And those are also ways you can increase your margin as well, is picking up in, if you're having inefficiencies with multiple people on your team who are responding and filing chargeback paperwork, potentially there's a better way to do that.
Fantastic. All right, Chelsie, it's been a pleasure chatting with you and clearing up some of these misconceptions. It's been a great time. Guys, Chelsie is always a great supporter of our events, so you can find her at our events in the future, I think. You can check out more at Approvely, and we have, I think, content about Approvely on our sites as well, so check that out. And thank you so much for tuning in to iGaming Daily.
Thank you for having me.
Thank you for listening to today's iGaming Daily podcast, supported by Optimove, the #1 CRM marketing solution for the iGaming market. If you want to find out more about some of the subjects raised today, feel free to explore any of the sites in the SBC News network or check out the latest edition of the SBC Leaders magazine. Happy reading.